What's up, guys? So I just wanted to make a quick video here today talking about how I view the market and the way that I look at things. And one of the biggest problems that I see with a lot of the educational videos on YouTube, and just a problem within new traders in general, is that they're kind of trained to think that the market is some type of robotic machine. So there's a reason why 90% of people fail trading, and I would say that is the biggest one right there. There's no indicator or algorithm or anything that will be right 100% of the time. Indicators are there to kind of give you guidelines to help you navigate through the market. They're not there to give you buy and sell signals. So if you have any type of super trend buy sell signal indicator on your chart, remove it right now. It's pointless. There's a reason why those are free, and I promise you it's not because they make people money. And so another thing is kind of going into that is people kind of tend to think of the market in a yes or no manner. They see that if the super trend buy signal says buy, then I need to buy, and there's no other possible outcome. It's going to go up. And if it says sell, there's no other possible outcome. It's going to go down, and that's just not how the market works. There's tons of factors and constantly moving metrics that need to be considered. And this is pretty much why trading psychology is the most important thing you need to focus on, especially as a new trader. I know a lot of new traders will kind of hear the term trading psychology, and they'll almost think of it as kind of pointless. They'll think, well, if I have this chart right here, all I need to do is figure out what's going to happen on the chart, and that's how I make money. But to fully understand the chart and what's going on, you really need to understand psychology. And pretty much, yeah, the market's an auction, just like any other market in human history. The stock market is an auction, which is pretty much just a battle between buyers and sellers. And one thing we know about auctions is that they can be controlled by human emotions, such as fear, greed, other ones as well. And no indicator or algorithm is ever going to be able to gauge that and gauge context. They can't read human emotion, so it's they don't understand the thought process behind why people are positioning themselves the way that they are. All they can see is the data, and that's why they'll really never help you succeed. There's so the thing about indicators, they're not going to help you by themselves. You really need to you need to learn how to use them. There's tons of ways to use all the different indicators. There's no right or wrong answer. There's tons of different ways to use them. The most important thing is that you are comfortable, and it fits your trading style the way that you use it. So if you want to learn more about trading psychology and the importance of it, a really good book to check out is Trading in the Zone by Mark Douglas. It's one of my favorite trading books of all time, and it talks about more of these concepts much more in depth. But yeah, so trading psychology is super important, and now we can move on to actually looking at the chart here and kind of what I'm looking for whenever I'm analyzing. So the main things I really look at is price action and positioning. So pretty much what price action is, it's just the way that these candles move around the chart. I can see with my naked eye just by using the volume and just the way that the candle's moving. Obviously they've already been printed, so I can't really go back in time and show you how they're moving. But once you watch a stock for long enough, I can tell sometimes Tesla, like you can see, sometimes they have really small candles, and sometimes they have bigger ones. And sometimes they'll tick up. You'll see it like whenever it jumps and orders come in, they'll move maybe like 30 cents at a time, and then sometimes they'll have 40, 50, 60-cent moves just in one tick. And whenever I see that, I know that there's some very aggressive buyers coming in on the tape. I don't even really need to see the tape. I can just see it within the way that the candle's moving itself. So yeah, that's pretty much just what price action trading is. And getting into positioning, the way you're going to be able to see positioning is you can see it through volume as well, using the tape, which would be like your level 2 data, and then the options tape as well. I'm a huge fan of options data, options flow, and using that to kind of complement my trading style. It really helps me figure out where options players are positioned in the market, and obviously we know that options are one of the biggest providers of liquidity. Each contract is tied to 100 shares of common, and for a stock like Tesla, 100 shares of common, that's a pretty good amount of money. That's a lot of liquidity being driven into the market just by options contracts. So yeah, I'm a really big fan of the options tape. In my private service, you can see all the options data within the Discord. If you're looking for your own, Flow Algo is a really good one. It's pretty expensive, but that's one of my favorites. as far as options data goes. But so pretty much getting back to positioning here. And a lot of the support and resistance videos you'll see, they kind of just train you to look for 3 rejections in one area. And I'll kind of show you what the problem with that is. If I delete these lines here, and let's say I just close my eyes and place a line anywhere on this chart, okay? I'll just kind of go back and forth. You can see at some point in time, this acted as support and resistance. We had a nice little bounce right there. We have some right here as well. A little bit of congestion over here. So you can see, really I can close my eyes and place a line anywhere on this chart, and at some point in time it's going to act as support and resistance, okay? So really you can't just go off of what you're seeing on the chart. It's important that you actually understand what's really happening and the motives behind these rejections and moves. So we're going to do a little example here. I'll show you on Tesla. So we have this really great move on Thursday and Friday to end the week here, and we'll just kind of get into the one that happened on Thursday here. So if we go back in time and we're looking at, if we're just doing the 3 rejections or whatever, a lot of people are going to probably put their lines somewhere up here. You can see we have those right here. So people are going to be wanting to use this as their breakout level if we're just looking at the chart. And obviously there's other areas you can place it to, but a lot of new traders are going to see these rejections right here, and they're going to want to use this as their breakout level. And that's fine. There's not necessarily anything wrong with that, but I'm going to show you how using your context and understanding the auction theory can help you get a better idea of what's going on. So let's if we go through here, we can see, let's just kind of go over the price action that we see here. So we can place a line right there. Now let's kind of go back in time here and see what's happening. So obviously right here we had a good move above. We opened right above this level right here, and this would have been my breakout point. I'll tell you guys that right now. But we have this key level right here, right? You can see right here we open above it, and then look at this volume bar. Huge volume coming through as we open above and push us up. So what that's pretty much telling me is that there's a lot of buyers positioned right here, wanting to push the price up from here. And obviously you can see we go back. We can see we had a little or I guess that's post market. We had a post market rejection right there, and we were able to hold it. Another rejection right here, and then as you can see, they finally pushed us below right here, but it was on pretty low volume. We had a retest there, and then this is when the big sellers stepped in. So they kind of pushed us down here. They let buyers push us back up to go test this level again, and that's when the big sellers really stepped in. Now if we go back here to the next day, we can see that at the open we tried to push above, and another thing that a lot of people have problems is they see a line get broken and they automatically think, alright, entry, I need to get in right now. But really you need to be paying attention to the price action and what's actually happening at this level here. Because as we can see, we break above, but it kind of looks like buyers are dying out up here. You can see they tried to hold it, but if we look at volume dies off big time right here. We have a huge dip in volume, and it looks like there's really not that much interest above our level right here, 662. We got all the way up to 666 or so, but there's just really no interest right here. And obviously in the next candle you see they have no problem pushing us right back below and much lower. So most people will see this and kind of think, okay, I need to enter right now. But really what you need to do is whenever you get a break, that's when you start analyzing the price action, analyzing the tape, analyzing the options flow, and seeing what's really going on here. And then as we continue here, you can see we had a really hard time getting through right there. Second, we tested it again, couldn't get through there at the end of the day. We go into the next day here, we have a bunch of chop in the morning, and you can see buyers want to get us up there, but there's some strong sellers that are saying no, this isn't going to happen. And yeah, as you can see, was able to push us back down, hold us beneath again. Next day, same thing, tested it. There's still sellers up there that do not want this to break. And now, whenever we go back and look here, I have a feeling a lot of people, especially with this movement right here, a lot of people aren't really going to pay attention to this level because there's not really a lot of clean rejections in the past. But just by going back and kind of analyzing, okay, what was actually going on here at these levels. It kind of gives us an idea of how people are positioned. We can see that we have a bunch of shorts right here, and that this is probably them getting this is probably them loading back up, and then obviously we had the ER, so this is them probably getting wiped out right here. But you can see that the next day they're loading back up again, and where are they loading back up? The same exact place. You can see we have a balanced day right here, and then now this is the big move right here. This is the trade that you can catch. So as you can see, we have this level going into ER. I probably really wouldn't be too interested in trading before an ER anyway. Contract prices are going to be super inflated due to implied volatility and all the other fun stuff that comes with earnings. So I'm really not even too worried about anything that happens right here. But as you can see, the day after earnings, we can see shorts are starting to load back up again. We get a solid push down, a good almost $40, I guess $30 push down. And we have really high volume again. So that tells us there's a lot of shorts loaded up at this level right here, okay? And then as you can see, we kind of balance the next day. They kind of try to push us back down in the morning, but what I would assume happened here is a lot of shorts start covering, and obviously whenever you cover a short position, what do you have to do? You have to buy. So whenever shorts cover and take profits or take a loss, whatever it may be, it creates buy pressure within the market. So we can see possibly some signs of some shorts starting to cover. We have a nice balanced day right here. And then the open the next day, you can see probably a lot of shorts covering right here, wanting to take profits from this move down. And now we get back up to this level right here, and you can see that we're still having a tough time getting through it. But whenever we get here, sellers are nowhere near as strong as we've seen them in the past, right? And that's kind of a sign that we may be able to lead into a breakout here. And then obviously we ended up breaking up. We did not trade Tesla on this day, but on Friday we traded Tesla. Our entry was 683 up here, and we made some good profits. But anyways, that kind of just shows you why you can't just look at rejections and think of it in a robotic manner. You really have to understand what's really happening at each level. Is there aggressive buying? Is there aggressive selling? Are shorts loading up? Are shorts getting stopped out? A lot of times you'll see shorts, and that's probably really what happened right here. Whenever we saw the big move up, shorts tried to defend right there. They realized they were pretty weak, and then suddenly you see a bunch of them start to cover, which adds to the buy pressure. As you see, we have buyers wanting to buy the breakouts, and we also have shorts getting slammed on their stops right here, because obviously if you're shorting right here, your stop's probably somewhere in this area. And as you can see, we have a bunch of shorts covering, getting stopped out, just applying more buy pressure to the market. And yeah, so like I said, that's kind of why you need to focus on what's really happening at each level. You need to really understand market psychology. You need to understand why people are positioning in the place that they are, and not just looking at the chart like a robot and just seeing 3 rejections and automatically thinking if price just peaks above that level for even 1 5-minute candle, that's an automatic buy entry, which is what indicators will tell you. That's not how it works. And the main goal of trading is to be consistent, and you're not going to be consistent unless you fully understand what's really going on there. So yeah, hopefully this video was able to kind of get your mind thinking in a different way than the rest of the basic YouTube educational videos that you see all over the internet. There's a reason that a lot of people don't talk about this, and hopefully today I showed you why. But anyways, if you guys enjoyed the content, make sure you leave a like and subscribe. I'll have tons more videos coming for you guys, and if trading is something you're super interested in and you want to learn about more in-depth concepts, feel free to join my private service. We have entries, exit, and tons of different things there. So thank you guys for watching the video today, and like I said, I hope it was able to help you out a little bit, and you guys enjoy the rest of your day.